This is the Investor Connect podcast program. I'm Hall T. Martin. I'm the host of this show in which we interview angel investors, venture capital, family offices, private equity, and many other investors for early stage and growth companies. I hope you enjoy this episode. Investor Connect is a 501c3 nonprofit dedicated to the education of investors and startups for fundraising. Please consider donating $100 to the program to help others in their investor and entrepreneur journey. You can find the donate button on the investorconnect.org website. Hello, this is Hall Martin with Investor Connect. Today we're here with Phil Blows, founder and CEO at AQRU and author of The Money Triangle. AQRU is a business that specializes in helping institutional and retail customers earn high interest rates on their cryptocurrency. Phil, thank you for joining us.
Pleasure to be here. Thanks for having me.
So where does this podcast find you today?
So just outside London in the UK. So a few hours ahead of you, I think. So hence the slightly the darkness outside.
Great. So tell us more about your background. What did you do before this?
So I spent kind of 15 years in traditional finance, working in kind of long-short equity, which is sort of like a market neutral trading for a couple of small hedge funds. Always working at quite small businesses and quite enjoying that because it was, allowed me to sort of, delve into lots of different areas of every business, from kind of strategy through to sales and kind of finance, all those sorts of things. So I did sort of, fairly deep finance for kind of 11, 12 years. Then moved into fintech, where we started work for a robo-adviser, where we built products to sort of help people better manage their finances. And then a brief stint at a payments company, and then founded AQRU.
Well, great. So tell us more about monetizing digital assets. It's a hot topic today, and many people are trying to figure it out. But tell us what your take on it is.
So I guess a lot of people, when they think of crypto, think of this almost like gambling money. That it's say, you chuck a small amount of money into it, and you hope it's going to sort of 10x overnight, and that's sort of the extent of what you should expose it to. But I think increasingly we're finding institutions entering the space and a lot of professional investors that are looking at it as a proper asset class. And a lot of institutions and high net worth saying 5-10% of their portfolios is now going into crypto. So it's been the best performing asset class the last 10 years, and it seems to be gaining just more and more traction, more and more use cases. So it's been something that is really appreciated. So I guess where that market is now changed, and I think why a lot of professionals are now looking at it, is previously it was very speculative, and now because you're able to do a lot more with things like Bitcoin and Ethereum, you don't just look for price appreciation. Most people are now actually earning interest on them, so lending those assets out to to credible institutions who are paying very, very high interest rates. And that's quite an exciting development, especially in the low yield environment that we're in. But also there's been this market called stable coins within crypto, which is, so simply put, they're cryptocurrencies that track the value of the dollar. So if you can imagine just having a dollar, albeit a dollar, but just in the world of crypto, that's what a stable coin is. And these coins are really in demand. So what you find is a lot of institutions are willing to borrow them at much higher rates. So for example, at AQRU, we'll pay people 12% if they deposit stable coins with us, or if they buy stable coins on our platform. So there's some really nice new opportunities. It's sort of the birth of kind of a fully functional financial system, all of it on blockchain within crypto. And the space is going from strength to strength.
So what do you see as the long-term opportunity here? Is it going to be multi-asset class, or is it going to go in one direction? Where do you think it's going to end up?
I think you're going to see it. I mean, in terms of the tech, I think you'll see the technology that sort of underpins cryptocurrency being adopted more by traditional finance. So, you just got to look at the fact that I could send $1 billion of Bitcoin to you today, and it would take, 5 minutes and cost $5. And if you did that through kind of the SWIFT network, if I was sending money from the UK to yourself, it would probably, although there might be an intermediary in place that might sort of artificially accelerated. It's actually going through what's called the SWIFT payments network, which is taking days. It's going through several banks. It's slow, it's expensive, and it's not a very useful way of transferring value around the world. So I think that that blockchain technology is going to permeate this. And that's just one use case, and there are dozens. I think so. I mean, that's how blockchain is going to start being used by institutions. But I think people are going to start looking at crypto as more of a, I guess, taking a more of a portfolio approach to it. So those kind of two products, I mean, that we look at. If you think of Bitcoin and Ethereum, they are highly volatile. Hopefully, they're going to increase in price over time. But what we do at AQRU is, we also pay a yield of about 7% on that. Now, if you think of the structure of what that looks like, it's sort of the underlying asset is volatile, and you're earning a 7% yield. That actually looks quite a lot like a dividend-paying stock. And then those stablecoin products I mentioned, where effectively the underlying asset is $1, but you're earning 12% yield on it. So what that looks like there is more like a bond. So what a lot of investors are now doing is saying, well, as opposed to just investing in crypto and hoping it's just going to go crazy, what I'm going to do is take some of the volatility out. So I'm going to have some of my portfolio in growth, which is sort of Bitcoin and Ethereum, and get a nice yield, and some of it in more stable, high yielding products like stablecoin. So you get this kind of nice diversified product that has an element of growth and an element of high yield. And I think that is where professional investors are going to look at it in the medium to long term and say, well, that's a portfolio that could significantly outperform kind of traditional asset classes. So I think that's where we'll probably see it go.
And so what is the challenge or risk here? Every return also has a commensurate risk that goes with it.
So I mean, there's fundamental risks in crypto. I mean, there's clearly, the assets themselves are very, very volatile. So Bitcoin is quite interesting in that there's always a fixed supply of Bitcoin. So there's only ever going to be 21 million Bitcoin, and we've mined something like 19 million so far. So, if price is kind of, a mixture of sort of supply and demand, we know what the supply is. So really the whole price is being driven by, how demand waxes and wanes over time. And I think that's why you see so much volatility, because on any given day, you have a government coming out and saying, look, we're going to accept this as payments. And then you have another government coming out saying, yeah, we're probably going to ban this in the future. So you end up with this like highly volatile underlying asset class. So, that's the main risk that you're looking at, is the volatility of the asset class.
Right. And then what do you think is the potential reward in the long term? You mentioned several benefits, but where do you think that's going to end up?
I think it'll normalize, because, it's crypto is a $2.5 trillion market already. There's a lot of room for growth if you compare it to things like gold and other things. And, if the more assets that get brought into the realm of blockchain and cryptocurrency, the bigger that market can potentially be. I mean, I don't see it sort of doing the same kind of level of price appreciation as we've seen in the last 10 years, which has been, thousands of X, so I think it's simply the world's economy is not that big. So I think we'll begin to see it normalizing, but I think still having a significant kind of premium over what traditional asset classes do. But I think as that kind of price appreciation yield goes out, people will be looking to sweat those assets a bit more, and hopefully coming to companies like AQRU who can pay high interest on it, because you need that to sort of boost the return and sort of get rewarded for the additional risk that you're taking.
Well, so one of the risks is regulatory. Of course, as you mentioned before, it's changing, and one government's doing one and others is doing another. Where do you think that's going to end up? How do you think that's going to settle out in the long term?
I mean, our hope is that the regulatory environment, as our view is that regulated crypto is several orders of magnitude larger than unregulated crypto. And all of the big institutions, banks that I speak to, the number one reason why they don't invest in crypto is because the regulatory landscape isn't clear. And I think, we've had some very, very positive comments out the US, and then very quickly followed by, the EU and the UK, saying that they will want to be, cryptocurrency hubs and, not stifle innovation, promote it, use this technology to improve the way that the economies work. So they're all making the right noises, which hopefully means that regulators are going to take a proactive and hopefully not a heavy-handed approach in this market. Which once they've done that, that's going to really open the floodgates, because all of the capital sits with regulated and large institutions now, and they haven't even entered the crypto market yet. So I think that's what's going to weirdly be the next big catalyst for the next bull run in crypto. And we see prices going a bit mad. It's probably as you see regulatory certainty entering the market, because it's going to unleash all this institutional capital that's been sitting on the sidelines. And I'm hopeful that that's where the market goes. That we do kind of build a regulatory framework that allows the businesses to innovate, but also protects consumers.
So tell us more about AQRU. How big is the company and what exactly does it offer?
So we've been going since January of last year. So in sort of January of last year, it was a bit of basically a PowerPoint deck that we were running around and pitching to seed investors. Very good timing in terms of the market. Crypto was one of the largest areas for sort of angel investors to put money into, and obviously VCs as well. So we raised $1 million pretty quickly. We then sort of hired the team, built it out, and within about sort of 6 months after completing the seed round, we got an offer to basically list and publicly trade in the UK via a SPAC. So in the process of doing that, we raised another £10 million. So the total for the year was about 11 million. And since then, we've just been, it's been on that kind of mega scale up. So we're now about 40 people. We've onboarded, as of about a month ago, 10,000 customers. But we've had a pretty significant growth curve since then. And we're sort of growing at about 100% a month currently as a business. And really that is because we have the simplest place really in crypto to deposit an existing portfolio or deposit traditional currency and start earning the highest yield you're going to find in digital assets. So as I mentioned before, stable coins at 12%, it's probably about 50% higher yield than you'll get from our competitors. And Bitcoin and Ethereum at 7% again is about the same, sort of 50% higher than you'll get if you go to other competitors in the space. So that's making us stand out, and we're obviously attracting a lot of assets because of that.
Great. Well, aside from the yield difference, what other differences do you have between you and your competitors?
I think our size is actually a bit of a benefit. We're still, although we've already got 10,000 customers and we're growing, we've been very, very keen to have to be sort of overstaffed in our customer service team from day one. So, we get amazing feedback from our customers around, whenever they contact the team and reach out, that our team just go to the nth degree to educate, to help, and to give a level of customer service that really isn't sort of around in many places in crypto. Probably because a lot of companies in crypto have grown very rapidly and they've completely outpaced their ability to service the customer. That's something that we've been very aware of, that, we want to give a really good service to every customer. So it sounds really simplistic, but it's something that's just not being done well in crypto. So I think that's one main thing. The fact that we launched with not just sort of a web app, but we've also got an Android and an Apple app from day one, which a lot of companies have, struggled to build out that kind of ease of use. So we've got all three platforms live and up and running in very, very short order. It just means it's a lot more simple for customers to use. And the ability to also deposit not just crypto, but also just normal currency and convert that into cryptocurrency for no fee is another area. So we have like fee-free, exchanges on the platform.
So what advice do you give someone that engages here with your program?
I'd say, first obviously do your own research and understand, the risks involved in crypto and, the fact that it is a volatile asset. Mm-hmm. And then, maybe pick from the assets that we've got on the platform, like try and have a think about, what's most appropriate for you. As I mentioned, stable coins, they're less volatile and they pay a higher yield. Or are you aiming for capital growth? In which case, Bitcoin and Ethereum, more volatile, more risky, but, you're hoping there's going to be a lot more price appreciation in the medium term. Those would probably be the main things.
Great. Well, when you started the business, what one thing happened that you didn't expect?
I'd say it was quite interesting. We had all of the money that we needed lined up, and then the market crashed by about 50% in May of last year. So one of the good things was we had a lot of angel. Half of the round was seed investors and kind of angels, and not one of them dropped out. They were just like steadfast, believed in the team, believed in the company. couldn't have asked for more loyal customers. And then we had another team, which were VCs, and none of them picked the phone up to us in the market downturn. We then closed the round, market went back up again, and they all came back, at which point we didn't need the cash. But I think it's a bit of a lesson that, we were probably a little bit slow closing the rounds. And I think, we had good relationships with all the investors that we were trying to get on board, but we kind of, it meant that kind of downturn when we were at the point when we were beginning to hire people and things like that, that was quite painful. But, it was a good lesson for everyone. And I think, we retained a really good group of loyal shareholders on the back of it. So I think it was it's probably all for the best.
Great. So what online information source do you find most helpful in your work here?
I'm sad to say it's Twitter. I know that sounds ridiculous, but it's like the sort of the news flow and the insight that you can get from a curated list of contributors on Twitter is the best place that you'll find for crypto information. I mean, you can get generic headlines and sort of like generic industry information from the major sources like, Cointelegraph and things like that. But, if you want real kind of insights and alpha, the community is really open. So it's like the best fund managers in the world telling you exactly what their process is for investing. And everyone does it in crypto. Everyone's very, very open about their strategies. So, you can learn a lot by just, following the right people and doing it that way.
I'd like to switch gears for a moment. You wrote the book, The Money Triangle. What inspired you to write it?
I mean, it was a bit of a labor of love. That I worked at this fintech for 4 years, and as I mentioned, we were kind of running around the country trying to help people manage their money. And over that 4-year period, probably interviewed about 10,000 people and took them through this tool. And it was pretty, if I'm honest, it was pretty depressing stuff. Most people get to the end of every month, they've spent everything that they've earned. They're slipping more into debt. They're not saving enough, and they're kind of sleepwalking towards a dreadful retirement, which probably means they're never going to be able to stop working fully because they're just not going to be able to. So, I guess whilst I was running around the country doing this, spending a lot of time on trains, as opposed to sitting there kind of watching Netflix, I was just started writing a book on a train. I pretty much exclusively wrote the book, on public transport, just going in between client meetings and just basically writing down, just distilling the learnings from speaking to all these people around, just a few pointers how people could improve their basic financial knowledge, basic financial circumstances. So yeah, it was really just from that experience.
And who's the primary audience you were writing it for?
I think it's kind of I wouldn't say it's a pretty broad audience. It's because the level of kind of financial understanding of most people it was sort of all pointed towards the UK audience, but I did try to make it more global with sort of referencing lots of US kind of financial concepts and things like that. But it's anyone who's not really sure about how to get on top of their finances. Maybe they feel like they're slipping a little bit. They need some pointers around how to spend their money a little bit more wisely. They're they don't know how to, if they're investing their money, where to put it. And maybe they're kind of sitting there thinking, should I do a side hustle to try and improve what I earn? Or, how do I make sure I'm next in line for kind of the promotion of work, these sorts of things. And, those are really the three sides. It's like how you spend it, how you save it, and how you earn it. And it's, trying to have all three of those sort of sides of the money triangle together is the idea of the book.
Great. And so what surprised you the most when you wrote it?
I think how difficult the editing process was. I think that kind of suits, going back and kind of fine tuning everything was, writing it. I think, I probably wrote it in about 3 months, but then probably edited it over about 9 to 12, I think. Just having to go back and over again and trying to get, feedback from other people. That was the real killer. But that was the most surprising part.
And what was the most important takeaway you found in the whole process?
I think just to get started. So stuff like this, I speak to so many people who say, oh, I wish I'd write a book. I wish I could write a book. And it's like, well, you can, just write like 200 or 300 words a day, and you'll have one in 6 to 9 months. And I know that's, and 200 words. You probably text more of that on WhatsApp every day. So it's like it's just get to start. I think most people overthink things and don't get started. And it's the same with founding AQRU. We could have just sat there and thought about it for a very long time, but we just started something, and that then snowballed. But it was just trying to get that catalyst, not mess around and sort of like overthink it. Just try and get something out there, kick it off, and then that's kind of the first step.
So based on this experience, what would you consider writing next?
I think it would have to be about crypto now. Or and hopefully it's going to be about how the story of how we went from a PowerPoint in January of last year to $1 billion company in the next sort of year. We've got the path in front of us, and we're scaling rapidly, and we're in that kind of super high growth phase, which is really exciting. And the lessons that we learn in the process. But I'd love to think that it's kind of ours to screw up at this stage. We've got a great platform, an amazing team. The customers are loving the product, and I'd like to think we're doing a very good job for them. So we're going to hopefully continue to grow at that kind of rapid pace. And with any luck, that'll be the next book.
That's great. Well, the last thing that we have here, what should we cover that we haven't?
I just think I'd encourage people to maybe look at crypto for the first time, but look at it in a different light than maybe they have done previously. Try and think about crypto as an asset class like stocks and shares and bonds. Don't think of it as kind of fun money and gambling money, because that's the easiest way to lose money in the space. So I'd encourage people, this is an area that's growing. It's one of the most exciting areas of finance at the moment, and it's probably worth educating yourself on the topic. And we have educational material on our website, and we encourage people to do that before they ever look at investing. But I think this is going to be an exciting part of finance that everyone is going to touch one way or another probably in the next decade. So it probably makes sense to try and be early and understand it, and then educate those around you, because it's going to be very frustrating if you don't.
Well, great. So how best for listeners to get back in touch with you?
I think best way is to probably go onto the site, which is AQRU.io, AQRU.io. We've got an intercom there, which I read all of the messages that come through that, and we've got a really, really helpful customer service team that can help everyone. But or reach out to me on LinkedIn is the best way. I always like to hear feedback. It's the breakfast of champions. So we like feedback. So keep it coming. We'd love to hear from the audience.
Well, great. Well, we'll include those in the show notes. I want to thank you for joining us today, and hope to have you back for a follow-up soon.
Thanks so much. Appreciate it.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Halty Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.